Joining me on the program now from Christian Savings, Andy Milne. Andy, kia ora.
Kia ora, Andrew. Great to be with you.
So, time or money? What are you saving here? Do you insert your card or do you tap and go, Andy?
Andrew, I'm on your side on this. I'm 100% a Paywave guy. I to the point where I have to really stop and think if I can't Paywave, what is my PIN number? I can barely remember sometimes. So no, 100% on your team there.
Now, there have been some changes on this one announced recently by the government. The Paywave surcharge is to be scrapped. And as a consumer, as somebody who does the tap and go on a regular basis, I'm thinking, wow, this is brilliant news. I'm going to save so much money and I'm going to be in less trouble with my wife, but not so fast. I mean, you can't do anything about whether or not I'm in trouble with my wife, but maybe the surcharge will just end up being permanent, right?
Well, that's right. Look, on the surface, it's somewhat of a no-brainer, and Christopher Luxon and the government have come out trumpeting this as a way of addressing the cost of living crisis, and you can see that argument. New Zealanders paid last year something in the order of $150 million in credit card and Paywave surcharges,
Yep.
And it's estimated that maybe up to 65 million of those were in excess of the true cost of making those
Wow.
payments.
Yep.
And to a degree, you'd say, well, isn't this a no-brainer? Like if you look at your coffee shop, you tap and you add a few cents on for the merchant processing fee. I mean, a coffee shop's got heaps of other costs associated with it. They're not surcharging you when the cost of milk goes up, or when coffee beans cost more, for their power bill, etc. So why should their merchant payments be any different? So you can kind of understand the logic. This is just a cost of doing business.
Yep.
But if you scratch the surface, this might not be the massive win that it's trumpeted to be. There's an old, to paraphrase G.K. Chesterton, before you tear down a fence, you should think hard about why the fence is there in the first place.
Yep.
So it's a little bit of a back to the future kind of situation. And if we go back to the early days of credit card processing, online, merchant processing, etc., you used to see where those little sellotaped on stickers used to now say, a 2.5% surcharge or whatever. They used to just say no Paywave,
Yeah.
because of you just opt out of the processing costs.
Mm-hmm.
So what the Commerce Commission did, the Commerce Commission in the late 2000s took Visa and MasterCard to court, who set the interchange fees, and the settlement of that process was that Visa and MasterCard were still able to set those interchange rates, i.e. that's the cost that the merchants pay for the privilege of taking credit cards or accepting Paywave.
Yep.
But the quid pro quo was to allow merchants to pass those costs on.
Mm-hmm.
There recently, as this hit the media, and what that's done is it's encouraged, it has led to an uptake in Paywave.
Yep.
So more merchants accept, Paywave and credit card now. So that's a positive. But those fees haven't gone away.
Mm.
There was a cafe in the media just the other day. They said last year they paid $17,000 in merchant fees.
Wow.
And which they were, and if they aren't able to pass those on to the consumer, that's another cost that they have to absorb. And as we've talked about on your show, quite regularly, small businesses are doing it tough.
They
and this
are.
is just another cost.
However, can I just jump in there, because this is just
Yeah.
another cost. $17,000 is a big amount of money, but it's probably less than what they're paying for their coffee beans or their electricity or their lease in a prime slot in a mall so that they can get the customer. Look, this isn't a new thing anymore. Is this just the cost of doing business? I don't want to pick a fight with the small cafes, but do they just need to go, we need to recognize this as a cost of doing business. If we want to break even, we just need to take this into account.
It is a cost of doing business, but to take your wife's side for a second here, Andrew, at the moment, that that's an entirely, paying that cost is entirely at your discretion.
Okay.
So, you and I, we like the Paywave, and we're happy to pay for the convenience of tapping the card and moving on with our lives. So that fee is entirely optional for us. What will happen is that those fees are then absorbed by the business but returned to the consumer by way of a slight increase in their retail prices. So basically the cost hasn't gone away. That $150 million a year that we talked about is still being paid by consumers, but it's now going to be paid by everybody, whether you Paywave, whether you credit card, or whether you pay cash.
Wow.
So, the cost, it doesn't really address the underlying issue, which is the cost of merchant payments themselves. And if we look at other jurisdictions, the Reserve Bank in Australia has recently come out and said they're investigating banning surcharges as well. But they are also looking at taking action working with taking action against Visa and MasterCard to reduce the costs of the interchange fees themselves.
Yeah, because this is the point here. Who should pay? Should the small businesses pay? Should the consumer pay? At this stage, it looks like the consumer will be paying. That is the only option that is on the table. And not wanting to pick a fight with banks or credit card companies, etc. But again, this isn't new technology. And with digital transactions, each transaction doesn't actually cost that much. If anybody's doing the price gouging, it's them. Should they be allowed to take such big margins on this one? That's certainly worth talking about, right?
That's a very fair question, and worldwide, there've been different examples of this. In New Zealand, we're probably late adopters in what's called open banking, which is where a lot of payment systems are democratized, and there's just a lot more competition. And if you look particularly in Asian markets, costs of transaction processing have dropped dramatically because it's just a lot more open and easy for other competitors in the payment space to get a foothold and offer alternatives. So, more competition is going to drive those costs down for everyone. But this move takes away the transparency really of what those costs are, which is potentially another barrier to competition in that space.
And hey, this other barrier that's being removed, being able to tell the difference between the sheep and the goats, being able to tell the difference between the thrifty and the lazy. I'm in camp lazy, Andy, and I suspect you are as well. But now, the great leveler will all be in the same arena. We'll probably still be paying slightly more for our coffee, but at least we get the convenience without the judgmentalism. I think that's a win. I'm pretty happy with that as an outcome, Andy.
Absolutely, and there's something to be said that the price that you pay reflects all the costs. It's always maddening when your coffee is going to be $5. Oh, now it's $5.50. That sort of thing. So it does. On balance, it is convenient, but it's not. It's not necessarily the universal win it's been touted to be.
That is not just the price of doing business, but the price of living in a convenient society. Andy, thanks for the work you do at Christian Savings. Of course, christiansavings.co.nz for more info. Thanks for being on the show today.
John, Andrew, thanks very much.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.